I beg my Nigerian guy, more I know he fights Chris, so that guy is that guy is going through a lot. Just one beat. If you catch him, you go beat down real life. Boy, nobody is smile with each other. See? All right, go ahead. Yeah. Yes. 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 Definitely. Yes. 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 That's philosophy. Yeah. Yes. If if both pair takes out the low, but the reaction at the low, like this one closed and this one wicked, but they both take the low, right? Yeah. So that's another SMT. Yeah. Yeah. He's on the lower time frame. He's fractal. Price is fractal. Yeah. 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 Um. Hold on. Alright. All right. So I was explaining few of my concepts that I used, and most of you are new here. Okay. So my discoveries, all right, during my chat times and studies and journaling. Okay. I discovered a whole lot of things on the chat. Okay. Things I didn't learn from my mentor, actually. Just personal discoveries. So hold on. You guys can see my screen, right?
Yes, sure.
Yeah. Okay. All right. So uh GBP USD. Okay. So first of all, let's explain like the last class we had, all right? I was teaching you guys this week above, close above, right? These are you read price on the higher time frame and also on the lower time frame also. Yeah. So these are you read price. We have different ways, all right? We have the market profile whereby price is closing price is taking eyes and breaking eyes, rejecting lows, right? Breaking eyes, rejecting lows. So that's the weekly the market profile. The more basic one. Okay. So right now there are advanced market profile, which are the ranging profile, the expansion profile, the retracement profile also, around the reversal
But
profile.
you can't see the screen. That's stop sharing screen, sir.
Let me show you back. Can you see the screen now?
Yeah, you can see it.
All right. All right. So we have the ranging profile, the um the expansion profile, the retracement profile, and also the reversal profile. Okay, so that you guys can go and learn that one on your own on YouTube or anywhere. So I'm only interested in you taking trades and making profit because I believe most of you here are like intermediate traders. You are not beginners. So from the other time frame, okay, this is how I look at charts, right? So maybe on Monday, or let me say on Friday or on Saturday. Most of the time, I don't really backtest during the weekend because of I have to rest and create time for myself. So on Monday, very early, like 12 midnight, I open the chart and analyze. Because my analysis doesn't take time, just few times. Within 5 minutes, I'm done with analysis. All right. So I'll be showing you something. All right. For I'm doing this for the sake of new students that was joined. Okay. So I'll be showing you something just from this year. This is January. Okay. Okay. So this is January. So this year and so this is the yearly candle. Okay. So how do you trade each year? It's very possible. For those of you that have the heart, okay, to trade a yearly candle. All right, this is the best model for you, and it's not um taking trades from full, like let me say from the beginning, or let me say from the middle. All right, you actually take the trade from this tip. All right, from this downside. All right, take it and hold it all the way up to this side. All right, this market side, and you can keep on holding. Okay, so this is how it works. Now you have to read the other time frame. I prefer you to read the weekly. Okay, I'll just stick to the weekly. All right, because week by week, all right, you can analyze the charts, and within 5 days you are done. All your analysis has played out, and but analyzing for the quarter, right, you have to wait for extra 3 months. Sometimes you might have forgotten the first analysis you did. All right, due to noises on social media, you start analyzing another way. Meanwhile, the first one was correct. Okay, so all right, this is how I read the weekly candle. All right, now I want to see on the first pair. It might be GBP USD, it might be Euro USD. All right, on the first pair, which is GBP USD, I want to see the week closing above, um, closing below. Right, close below. Then on the other pair, which is Euro USD, I want to see price week below. Okay. All right. So why is this happening? Okay. Now these two pairs are like, the reason why we call them correlating pairs, because they do the same thing. So they are like, okay, let me make it more realistic. So they are like okay, just like they are friends. All right. So they allow each other. All right. They allow each other to have their own time of the market, have their own time to make money on the market. All right. Either way, they are both making money, but there's how they lure people in. All right. So maybe there are a lot of buyers or sellers, whichever one. Okay, we are bullish here, so there are a lot of sellers here. All right, on let me say GBP. So they will lure you guys, like for those of you that pattern trade, close above, close below, week above, higher prices, all those kind of stuff. Right. For those of you that pattern trade it, at this point you are expecting full time sell. Right. You're expecting price to keep on going down because we close below. All right. And now you don't have the knowledge of correlating two pairs together. Right. Now, seeing this on the other pair, they are doing different thing. All right. So once they are both bearish, right? They are both, now this is a bearish market, right? from this point is a bearish market. For Euro USD also bearish market. But once they are both bearish and they did different thing, right? Like the on GBP USD there is a close below, and on Euro USD there is weak below, right? So now this is like a signature. Like for actually, you were asking me about signature of reversal. This is one of them. All right. This is like a signature. This is like discussion that okay, let's reverse from here. All right. Now for those that are stacking their sales from this point, now you can see the next candle was explosive, right? Took out everyone selling from this point, and also people that have put their break even, or people trying to trade this breaker. All right. They got wrecked because there was a little sell here, then boom, into their stop losses. Right. So from this stop, all right, from this stop, let's analyze. Okay, let's see. So now before any explosive reversal, okay, there's this this language. I call it language. I don't call it pattern. It's also a logic also, but I call it like a language. This is like a discussion between two of them that okay, we're about to sell. Okay, let's do this. You understand? So now look at this. Closed above, right? You're only interested in the next candle, but for the advanced and for those of you that I also teach you how to take it from the highest. Actually, how to know it will form. Okay, I'll teach you that. But for now, you're only interested in taking the third candle. All right, just like this week. Okay, that was why I was so confident about holding my trade till Thursday and Friday. Okay, so close above, right? Then the other pair wicked above. Right. So you're interested in trading only Euro USD here at this point. Now, another thing is you are interested in taking Euro USD from this high because this is like a turtle soup, right? But on GBP, on both pair, you're interested in taking the third candle. All right. You're interested in taking the third candle, but the one with high probability is the one that wicked, not the one that closes. Okay, the one that weak because this like real liquidity sweep. Okay, now you are selling on Euro USD. All right, why those that are pattern trading this close above, they are buying. All right, they are buying all the way down, and which is loss. Okay, all right. So now this is another type of reversal. We also have SMT. Okay, we also have the normal SMT everybody knows, right? So from this point, all right, take a sell. Now, for those of you that know about weekly profile and how to frame a sell, okay, this is an assignment for you guys. So this is Monday 23rd September 2024. So I want you guys after the class, all right, you can reward the video for after the class. This is your assignment. Go and explain how you would have taken a trade from these highs. All right, you all know I'm not interested in taking trade from the middle or after this. No, I like taking my trade from this upside. So I would have taken trade from this high. No, let's use Euro USD for that. So I would have taken trade from this high, maybe the first candle or the second candle. All right, that's the first assignment.
Except you are using premium.
Yeah, don't worry, you can use 1 hour. You can use the 1 hour. Yeah, it will show on the 1 hour. Should people have money, go and do premium now. Me, I don't have. All right, so sell all the way down. All right, now look at this one. They both did the same thing, right? This point. Sorry. Look. Okay, they didn't. This point. Right? Close below, right? Then Euro USD weeks below. You can see it, right? Then you buy from there. Boom. For how many weeks? One, two, three, four. For 4 weeks. All right. And another thing I also tell you guys is please take note. Always look at your weekly candle as 1 minute. Don't see it as this is a very higher time frame. Like no. I can't be holding trade for like that. No. The way you hold your 1 hour trade, the same way you can hold your weekly trade, but it's just the time at which each candle closes and form. For the 1 hour, after 1 hour, you expect the next candle, and for the weekly, after 1 week, you expect the next candle, right? So don't be scared. So now look, this is like consolidation on the lower time frame. This up and down movement, right? If this is 1 minute now, I expect this should be like 30 candles, right? 31 minute candle, which is 30 minutes on the 1 minute, right? But on the weekly, this is like almost a year, right? So you can also see that we are also the main reason for journaling is because maybe you did something before, and due to you are thinking of something else, you are like there are a lot of activities you are doing, you might have forgotten the first one you analyzed, right? But if you check your journal and the date, you also put the date, so you can, okay, and this is also date I was like, okay, I analyzed on GBP and this was my results, this was my feedback from the chart, and you can now recall, okay, this was what I was trying to figure out, and you can come back and start from where you stopped, right? So that's how it works, and that's the only way you can like grow. All right, full-time journaling. I sent some of you my journaling templates. I don't know if you are using it, but try and use it. All right, so for this year, how would you have taken a trade for this year on Euro USD? Because now this is how you choose the pair you are going to trade. These are you choose. Now between these two, now those of you that said someone like I've forgotten his name, Mustiak, something like that. You were like, it's not everybody that like Euro USD, it's not everybody that like GBP. What about those of you that want to trade Ethereum, you want to trade BTC, you want to trade USD card, you want to trade USD JPY? Did you know how those pairs work? No. And for me, I can't start decoding it for you guys. Yeah, because I've studied Euro USD and I've studied GBP USD, and you saw it on my social media, my Telegram, and my Twitter. That's the only thing I trade. I also trade gold and BTC USD, but recently I decided not to trade it again. That's not because I cannot trade it. That's because I just want to be diligent with one pair. There is this familiarity, over familiarity with somebody with like human is not good, right? But with forex, with trading, with like a pair is the best. All right, be familiar with it, like even without too much analysis you already know what you are doing. Just you are using your brain to draw those lines, and without even touching the tools on trading view. That's because you are so familiar with it that you know their next move. You've been trading it for long. All right, so stay with one pair. All right, it's an advice. I'm not forcing you actually. All right, but the best thing you can do is to stay with Euro USD and GBP USD. All right, best thing you can do, because it's just so simple, and it's like you don't have choice. In a week you must see a very nice RR trade, like 6 RR, 5 RR. For those of you that you stick to your plan. For all right, so you stick to your plan, and there's how these two pair behaves. All right, they both go the same way, but there's one that always gives you what you want. So you might be confused on Euro USD, but on GBP USD, there's no way you can't be confused. All right, and GBP USD is more clearer and way better than Euro USD. For me, I don't know about you guys, but for me, it's way better. So I will advise you again. I'm not forcing you. It's not a force. It's an advice. I will advise you again. Please stick. It's an advice. All right, it's an advice. So there's no please. Stick to one pair. When I mean one pair, I mean these two GBP USD and Euro USD. Take it as one. All right. Now we all know that you're not going to be trading GBP USD at this point, because GBP USD closed below this candle and Euro USD wicked below the candle, right? Which means we are going to be trading Euro USD. Now, the reason why I'm using the weekly is because knowing how the weekly close between each other, right? Knowing how they close between each other is like, uh, bias, right? Because the bias now you are seeing here is due to bullish, because due to what price is doing here. So you know it's bullish, right? After all the back testing. Now, the reason why I trust this price is because I back tested it. All right, I back tested it all the way down, and it has been happening for a very long time, right? I back tested it. All right. I also back tested the normal SMT. Okay. So that's why I trusted it. So, and you can see that what we've been using actually. All right. I'm just sharing it now. So at this point, you're only trading Euro USD because this is the only pair that wicked. All right. I also give another explanation. That was the first student I had, Abraham, and some other people. I taught them week above, close below, week below, close above. That's another type. Okay. That's another type of framing your bias. How the candle forms. All right. Instead of going to inside one weekly candle and start marking range up and down, and getting yourself confused due to a lot of fair value gap, a lot of other blocks inside. Be like, oh, price bounce out from here. You set a trade from there and boom, trade through your surpluses, and you're getting wrecked every time you are taking trade. Instead, just frame your bias on the higher time frame and use lower time frame as an entry. And once you have taken that entry, get out of that lower time frame. Right? Just go to like intermediate time frame so you don't get confused. Okay, so that's how it works. Now let's put a mark on this. So how you would have taken this trade on Euro USD. Okay, so now for those of you that don't know how to share your chart, okay, I'll teach it again, and this is the last time. Okay, so now you can see this cross, this plus circle, this plus sign here. You tap it. All right, you can see it, right? Let me take out this one. Now you choose any pair you want due to, okay, let me say Euro USD is there. You choose GBP USD. Then you tap new pin, right? Not same scale, not new price scale, new pin. All right. So you tap on it. And you can see now it's at the top side with this mark sign. Then you can cancel. And it's showing line chart. You can double tap on the line. Then you remove it from line, change it to candles. Then tap OK. You are done. All right. Okay. So let me remove it. All right. So we're analyzing Euro USD because it's the only candle that wicked. It's the only pair that wicked below, not close. Okay. So I put a vertical line on it. These are you trade for long. These are you hold your trade this way. This is the only way you can trade long-term trades. Okay. Now the reason why I use this weekly, the weekly for this analysis is because I understand weekly profile. Okay. I know how to now weekly profile is not just static, right? It's adjustable. You can adjust it. Maybe Monday formed low of the Monday tapped into a key level, or Monday just rallied and start buying, right? Rally, and I didn't say range. It was like Monday was an expansion. Let me put it that way. So you don't expect Tuesday to come back to Monday. It's just logical, all right? So there's no liquidity to be swept. First of all, because it was an expansion, right? It's only doing a ranging Monday. That's when you can expect Tuesday to take out Monday's low or high. All right, depending on where price wants to go. Now, most of the times, or okay, let me say half of the time, or sometimes on Euro USD, Monday will range. On GBP Monday will also range. But Tuesday we take out Monday's high or low, depend on the market direction. Monday's high or low, and on GBP. But on Euro USD, there will be a failure swing, right? So you are trading GBP and you are leaving Euro USD. Both of them are still going the same way. They're still going the same direction. But because GBP took out the high of Monday or the low of the Monday, but Euro USD didn't, then you trade GBP USD. Okay, that's how you choose the pair you are going to trade. All right. Sometimes GBP USD might move slowly, and Euro USD is moving faster. But that fast move is for you to lose confidence in, like, oh, let me close. It's ranging. But after your closing, you will see some kind of price action, and price will start moving very fast on GBP USD, and Euro USD will become slow, right? So that's how they work. Their aim is to just confuse you, and just make you feel miserable, and lose interest in the buyers. And the next thing, once you close, you see price start going in your way. It's not that they are monitoring, they are not monitoring, they are just reading the way you are behaving. Those guys are smart. That's why they are called smart money. You can't imagine how smart those people are, right? They've been with the chart even before you were born, so they know and they are the one moving the market. So you can't just you can't outsmart them. You just have to follow up. You have to be used to how they behave. You have to understand their character. You have to behave like them. All right. I behave like them. I always wait for people to get swept out before I enter trade. All right. It's just like I'm one of them. It's like I'm not one of them. It's just as if I'm one of them, because I see myself taking trades, and I was like, wow, nice. That was when I became so much more interested in waiting for liquidity to be taken out. And also the way they produce their candles, the way they print out their candles, just to give they can't hide this information, they can't hide it on the chart. But for those of you that have eyes that can see, yes, you will understand that, oh, this thing has been happening, let me just follow it up. All right, you follow what you follow how price um prints, maybe over time. They've been doing this for a very, very, very long time, so they can't change it now. Okay, so back testing how that repetition, this is an algorithm. It's not updated. All right, it's just one. All right, so it's like a circle. So once they turn around, they will start again that same way they move. They will turn around. It's like a circle. So once you get the loop of the circle, then you are good. You keep on taking trades, and it's possible not to lose. It's actually possible. When I mean not to lose, I didn't mean you won't take losses. Right? It's possible for you to keep your account, but you still take losses. Actually, like this week I didn't have any loss, but last week I had one, and it was not even up to 1% of what I made that last week. Right? So that's how it works. You make losses, but don't blow your account. Okay, and don't be impulsive. No matter how good you are in trading, all right, you only risk what you can lose. All right, just to keep the discipline going. It's not that if you risk everything you will still make profit, because you already know how the market won't. But you keep on keep with the discipline routine. All right, so enough of the talking. Let's go straight to let me use the file if I could get there. Yeah, okay. Let me use 1 hour then. Let me check the 30 minutes. If it can. 30 minutes should. Okay, yeah. Wow. Almost. Now, when did we start buying from this point? This is London, right? During London session, right? So you can see this year started buying during London session. This is not like, guess what? This is not hindsight. This is what I back tested over time. Okay. Now look, weeks below, right? Close below at this point. Now you can see there was no clear liquidity at this point. And now after this thing, how do you know that this is what price is about to do? Now there will always be an SMT, not always, all right, but 90% of the time, or let me say 80. Let me not be overconfident about it. So 90% of the time, I'm sharing this thing with you. This is like this is like a glitch. All right. I've never watched a video about this before. So I'm believing I'm the first person sharing it with you guys like this. Some person might have discovered it, but I'm the first person sharing it. Yeah, I don't know about other mentorship out there, but for me, I'm sharing it with you guys. Now, there will always be an SMT. Okay, there will always be an SMT. Always. Okay, so the two pair, all right, they will always do something. They can't just start moving like anyhow. Haphazard, no, they can't. They have to move according to their plan and according to their discussion. So you must know how to read price, right? You must know how to read charts. You must know how to read their language. It's just like for those of you that do software engineering and coding, you know how to read codes, right? So this is their own code. So you read them with the chart. Okay. So after the sweep, all right. This was a sweep on Euro USD. This was a sweep on GBP USD. After the sweep, okay. Now this was key time, right? Monday. No, yeah, this was Monday. Now this is where Monday formed low of the week. So this is Monday, January, uh, London session. Okay, so we took out Asia. Okay, took out Asia. All right, same range. Just Asia low. Took out Asia, right? For those of you that know about Asia range, I've taught that in the previous classes. So price took out Asia, right? Now the same thing happened on GBP USD, right? So this is where I don't trade. Now they are both doing the same thing, so I'm not interested in trading, right? I'm not interested in taking any buy. Okay, I'm not interested. Now the reason is because I want them to do different thing. I want to see turtle soup and what failure swing. So on after the Asia session, London taking out Asia. So I'm waiting for something else. I'm waiting for my model. My model. Now, this is actually my model. This Asia, London taking out Asia. But I want it to be different. I want it to be like, failure swing and turtle soup. So if I don't see failure swing, I don't trade. And for those of you that want to hear it now. If I don't see failure swing, I don't trade. You see most of my trade. Yeah. Yeah. Yes. Yes. Now this I wanted to clear it later, but since you asked about it, yeah. Now, SMT is not only about highs and lows, it's also how price react to key levels. Now, some of you are confused about key levels. When I mean key levels, I mean external liquidities and internal liquidities. All right, so highs and lows, all right, are key levels, but it's not any random highs and lows. It must be sessional highs and lows. Okay, let me not call it sessional. Let me call it quarterly highs and lows. All right. So when I mean quarterly, I'm not saying 3 months. All right. I'm not saying 3 months. So don't be confused about the quarters. Okay. I'm not saying 3 months. I'm saying when I mean quarter, I mean the segment of each candles. So for the daily, we have 4 quarters. All right. We have the Asia, the London, the New York, and the midnight. Right. That's 4 quarters. We have for the weekly, we have 4. Right. Now, this is what I'm saying we have 4 is because Friday is another price action of its own. Okay, it's another price action of its own. You can trade Friday on its own. Okay, so we have Monday, Tuesday, Wednesday, Thursday. Those are the 4 quarters of the week. But Friday is another, is another candle. All right. So for the monthly, we have the week 1, week 2, week 3, week 4. That's 4 quarters. Now for the yearly, we have 3 months. So first 3 months, second 3 months, third 3 months, fourth 3 months. That's the quarters. Okay, so don't be confused. All right, make yourself clear. All right. So this is London, right? Took out Asia, both of them, and they closed below, right? But I'm not really interested here because it's not my model. So I'm expecting New York to take out Asia low. I'm just expecting failure swing between two pairs. So my next expectation now is London and New York. So this is London low and this New York opening, right? This New York opening. You can see it, right? So price took out London. New York took out London low at this point. You can see it, right? Failure swing. But on Euro USD, all right, is a failure swing on Euro USD, then turtle soup on GBP, right? So this is where I trade only GBP. You understand? It's just like how will I put it? Normally you're supposed to be interested with Euro USD, but on the second candle, on the second weekly candle, okay. So that's the only time you're interested in it because it's somehow clear, okay. So turtle soup on GBP, failure swing on Euro USD, boom, you take a buy. Now you're not taking this buy due to you're just taking it as random. Now this is time alignment, all right. So from the opening of this candle, all right, you start taking trades, all right. So you can take your trade from this point, all right. Take your trade from here. Either way, both are sniper entries. Even though it's model one, both of them are what? Sniper entry. And this is inside New York, right? Now you've taken the first trade during key time, right? Taking the first trade during key time. Now price is moving. Okay, let me just say this is the only trade you take, right? And you go to like the daily. Yeah. Now, and you held for this long. Is it not marvelous? Like, is it not like surprising? Now, if somebody see you take trade from this point now, and you held it up to this extent, how many hara do you think this might be? These are thousands of, you make thousands of money from this point, and you can see it's not you took it from the week, right? And boom, all the way to the upside. Now, this is the first trade you would have taken for the year. This January, taking the first trade. Now, the second one, the same model. Now, I won't be doing anything different apart from this. All right, the same model you've been taking from this high to this downside is the same model you take from this low to the upside. So let's go for the second entry. So we've taken the first entry on the first week, right? Now let's go for the second entry. Now you can see it, right? Now you took your trade on this one. Now you expect, now since there was no entry on Euro USD at this point, then you've taken it on GBP USD. Nice, that's very good. Okay, you are taking one of them. So you expect this same candle, higher time frame, this weekly candle on bias to happen again before you frame yourself for another trade. Okay, now the next formation was this, right? This one wicked, right? You can see it, right? So you are analyzing this one, this GBP USD, to take trade from this tip. Okay, so let me put a vertical line on it. This is it. Okay, so you are looking forward to take your second trade. So let's check it on 30 minutes again. And mind you, before I proceed, all right, let me show you something. Before I proceed, let me use Euro USD. Now look, on Euro USD, we are in a key level. All right, we are inside the key level. You can see this is. Let me draw it out. This is other block. Now those two consecutive close candle is another block. All right. I see price tapped into it. Okay, let me even draw it well. You can see price tapped into it, and there's also a fair value gap. I also taught you how to draw a fair value gap another way. All right, from this high, sorry, this high, this low here. Okay, these are now this high, and this other high also. You can see, right? So other block with fair value gap, boom. Then this formation happened inside. Now, even without key level, all right, note, even without key level, you can still use this. All right, you can still use this weekly bias type of entry. You understand? Even without key level. Okay. So I hope you still you still remember your assignment. This high. All right. How would you have taken a trade from this high using this model I'm teaching? So let's go to the second candle. Please, are you confused? If you are confused, please let me know so I can, you know, get your point of confusion. Yeah. If you are confused, please let me know.
Bro, like GU like took the low. Okay, then you entered on GU, not EU, right? So you entered on turtle soups, which asset giving turtle soups. So you not entered on failure swings assets, right?
Yeah. I don't enter on failure swing asset. I only enter on thoughts.
Okay, okay,
Yes,
okay.
yes, yes. So, this was the second one. Okay, this was the wicked, and this is now you can see this started buying during Asia or CBDR, but let's check the other pair if they both did the same thing. Okay, so now look, you can see CBDR and what Asia. Turtle soup and failure swing. Now let me make something clear to you guys. Okay, sometimes, not every time, sometimes, okay, Euro USD move during Asia. Okay, sometimes Euro USD move during Asia, but if you start moving from that point, then you expect London to do model one, and boom, you take your trade. All right, but at this point, I'm not interested in taking this buy due to it's actually my model, right? But it's not my time. I hope you guys understand. This is like my model, but it's not my time. You can see turtle span failure swing. I told you before that reversal happen, all right, you must see SMT. So this is the failure swing, and this is the turtle soup. But this is not during key time, so I'm not interested. So I'm just holding my buys from this point. Okay, you can see how I'm working everything out one by one. So you can decide to take it now from the third candle. All right. So you can decide to say, okay, yeah, the third candle is what I'm going to be taking, which is from here. So the third candle starts from this vertical line, right? Third candle starts from this vertical line. So there you go. Yeah. So
Yeah, bro.
now, hold on.
You are watching only EU and GUSMT, not considered for DXY.
Yeah, I consider it for this, but not every time. Now, those of you that you love checking only DXY and fixing it with EU. It's not bad actually, but you can actually survive without DXY. For me, I
Okay,
don't think,
okay, bro.
yeah, you can survive without DXY. I won't lie to you. I won't lie to you. For over 2 months now, I've not even opened the XY, and I've been taking crazy trades. To be honest, I'm not trying to counter Romeo, because Romeo said we should always check the XY. I'm not trying to counter Romeo. Romeo is the goat, is the best. ICT is the best. I'm not countering anyone. But for me, for 2 months now, I've been taking good trades and I've never opened DXY. Maybe after this class I'll open DXY, but I'm just trying to let you know that without DXY you can survive. Yes. Yes. Now look at DAX. I don't know if any of you know about DAX. Okay, my Nigerian guys, they know about DAX. Look at DAX. Look at most of these rich traders. There's somebody called Operandi, Dynamic Operandi. Those guys, they don't even know what's DXY. Funny enough, they don't know what's DXY. Okay, now the trading industry has been littered with much of noise and bragging and fake results and shits. I'm not trying to be one of those people that troll people, but I'm just trying to tell you guys that stay away from noise. Okay, now on your own, you've learned a model. On your own, sit down with that model and learn it. Okay, sit with the model and learn it. All right. Now know how you take trades and how you frame yourself in that trade also. Okay, so don't just go around and start following people and they are telling you nonsense, and it's affecting your trading journey, it's slowing you down. Trading journey that is supposed to take up to, let me say, 2 years, you are now 4 years, you are still unprofitable. All right, you have to go to where the information is right and where it's sincere also. Okay, so that's how it works. Now so first of all, this is the first SMT. But this is not like the sessional SMT, right? Because both of them did turtle soup here. You can see this low, swept this low also. So I won't be taking trades during this day, and this is actually Sunday also. So on Tuesday, all right, I saw my model. So from this point, that's the first SMT. So Tuesday took out Monday low, right? You can see it. So Tuesday took out this Tuesday, this Monday. So Tuesday took out Monday low, and my model was here. Now this was Asia, right? She had got swept during London, right? Swept during London. Then failure swing on Euro USD, all right? Failure swing on Euro USD. You can see it, right? This low was not taken. So you're only interested in taking what? GBP USD. So boom, you take another buy. All right. So let me take out this one. That's not your entry. This is your entry. Let me write it. You can see how I'm putting everything together. All right. Please, I believe you guys are understanding what I'm doing here. All right, so we've taken the second trade, right, from the third candle of the weekly after the bias. All right, what is this?
This is dinosaur.
Oh god.
You're funny, bro.
This is the very actually, that's why I can never get angry with actually. It's just you just look for something that make me laugh. This guy, no one said
Yeah,
just see, don't fight with this
yeah,
guy. This guy did very funny. Those things you
you're a
said,
legend.
you
I'm a
just said
legend.
funny. What's this? This is the very beginning. You've made your way through all available data. We God, what's my business with dinosaur? All right, so we've taken the first trade. All right, now two trades now on GBP. So the first one sniper, second one sniper again. Right now you see you are holding up for the year. You've not seen any trade on Euro USD yet, even though the first one was wicked and the second one was closed. Right now we go again and search for another entry. Right, search for another entry. Now look, another one wicked. Right, and the next one closed. Right, boom, upside. Right, you can go to the lower time frame now and analyze. Let's do it. Let's do it. Hold it on this point. Let's do it again. So we've taken 2 trades in total on GBP USD, and you know your targets. You are just holding. All right, you don't know your targets. You are just holding until you see something else, right? So you see something else. Now, for some of you, right, you can decide to just take it weekly. So once this week close, this first trade, this week close, this third week here, you close. You wait for the next one. You take another one. You close the third one. Once this week close, maybe let me say on a Friday, you close again, just like that, and you're taking trade just like